In this presentation, we will review the financial statements after entering the payroll for the month of October within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We have the open windows open. You can open the open windows by going to the view drop down and looking at the open windows list. We're going to open up our reports now, starting with the balance sheet by going to the reports drop down, going down to company and financial, and then finding that balance sheet standard report. We're going to run the dates by going to the customized reports up top, changing the dates from 01/01/21 to 12/31/21, the date range that we will be working on January through December 2021. Then we're going to take a look at what we have so far, starting with the checking account. All we have is payroll here, so we're just processing payroll so we can concentrate on that. Therefore, we have a negative checking account. That's okay. If we double click on it, then we'll see what has happened for the year, just payroll. And note that this is also the benefit of having a payroll account. So if you're processing payroll and you enter all the data or enter money into another account, a payroll account, because then you can really just see all the payroll information. You can see how dense the payroll information is. So just having one checking account that's dedicated in essence to payroll and putting money in and out of it just to process payroll so that you can have a QuickBooks basically record this information and see an account with just payroll in it is nice. So that's something you can do by just setting up two payroll accounts. So just be aware of that. We've got the payroll the first month we had, and then we paid, and then we paid the liabilities. And then we had the second month that we ran it for. Note this is the paycheck date that we ran it on here. So this is for the end of August. We ran the payroll in September, and then we paid it September 15th for the liabilities. So we paid the payroll, the net check, and then the liability check here given by the liabilities. And then for the end of September payroll, we ran the payroll October 1st, and then we processed the checks then for the net checks and then paid the liabilities on October 15th. And then for the September payroll, that was September. Then for the October payroll, we just ran the check on October 1st for the net check, and we have not yet paid the liabilities. That's what we have so far. Then here you can see that this information is given by our 4 employees. If we double click on any of them, let's take Anthony Moore, then we can see that this amount reported is the net check, $2,052, not the gross check that was actually earned here. So the net check is what is, of course, in the cash account. That's what we actually paid out of the checking account. I'm going to close this back out and see what else we have here. I've increased the font to 11, so it might be a little bit easier to see. So now we've got the liabilities that have been created as we process the payroll check, these being what we took from the employees and what we owe over and above it for employer portion of payroll taxes. So we've got the FIT, the HI, the OASDI, and this should match what we have entered into basically our Excel sheet. So you can see how this happens on a journal entry basis. So if we match all these out to our Excel sheet, they should match as of this point in time. If we were to add up all the liabilities at this point in time, except the accounts payable in our worksheet, that adds up to, if I just pull this up a little bit, $40,626 on liabilities, in essence, payroll liabilities, and that's the $40,626 here. So that you can see how we've entered in journal entry format in the Excel worksheet. If we see it in Excel, well, how does it get put in place in Excel? Well, if we go into the FIT, we're going to see, again, a bunch of data, paychecks, and then the liability, then paychecks. A lot of information here. It's broken out by employee once again. So here's the first payroll, the 4 employees that built up that FIT liability, and then we paid it, bring it down to 0, just like any kind of payable account. Then we've got the 4 next employees, and then we paid it. Then the 4 next employees we have not yet paid this payroll period. If we double click on any of these, then let's take the next Jill here. 474, where does that number come from? If I double click, I'm not going to get to a journal entry here, but it's still kind of made in the same format. If I go into the check detail, this is coming from the FIT, Federal Income Tax Withholding, which was this 474 here. So you kind of got to piece it together when you're looking at QuickBooks. It's making it still debits and credits in essence, but you have the more detail of each check. And so think about, how would that look in a journal entry or versus this format? How can I go back and forth and see where QuickBooks is generating this data? Because clearly these are paychecks, and these aren't the net check. This isn't the check amount. This is amounts that we're drawing from something on the paycheck, kind of similar to if we wrote any other check, the expense side of things, or if we had multiple accounts. So you got to go in there and kind of piece together what QuickBooks is using and pulling from that paycheck in order to make this information. Closing this back out, the same thing would be true for any of these. If I go into the OASDI, let's say this is the Social Security, same idea. We're going to have all the social. Now there's more data here. Why is there more data? Because there's an employer and employee portion. So now it looks like we have twice as many employees. We got Anthony, Jill, Jones, Judy Jones. That's because there's an employer and employee portion, and then we pay it off. So, and then we have the whole thing happen again, and then we pay it off. It goes back to zero, just like any nice liability type payable account we would think happen. We want to see that trend. If it doesn't go back down to zero, or that's something funny happened there, and that's not good. So, and now we're here, and if we go to any of these, let's go to Judy Jones this time, 2,170. Where does that number come from? If we go to the check detail, well, there's 2,170 that was taken out of the employee paycheck and the employer portion. Both of those make up stuff that we kind of owe now because we took this from the employee. We took this over and above. That's what we owe on employee payroll. And we're going to have to pay that to somebody, to the government, to the Treasury, to the IRS, to the Fed. So we'll close this out. We'll close this back out. And let's close this back out. Now let's go to the profit and loss report, the income statement, by selecting the reports drop down up top, scrolling down to company and financial, and selecting that first one, the profit and loss standard. Changing the date range once again to 01/01/21 to 12/31/21. And here's what we have so far, the 157,846. Now if we change this date to just the date that we processed, which means we processed this on 11/01/21. So it's for the end of October. We ran it in November. Then we get basically 1 month of information. Remember, it's all grouped in there. So now there's just going to be a ton of stuff in here. If we run it for the entire year, it's still a ton of stuff just for one pay period because QuickBooks is grouping everything in there, including the payroll, gross pay, and the employee portion. If we compare that to what we have so far, on the Excel sheet, we did this with 2 journal entries, one for the employee and one for the employer taxes, adding up to the 51,755, if we can see that, 51,755.43. And so that should be 51,755.44. It's off by some pennies. That's okay. So that's what makes this number up. If we double click on that, then we're going to get that detail. And again, it just looks like an overwhelming amount of data, and it kind of is. But if we break this down, we can think, okay, what is it actually doing here? This is just one payroll period. This is November, because we have the dates November through December. And imagine if you see the entire year here. If I change the date 01/01/21, and someone looked at this report and tried to figure out what's happening with payroll, you're just completely overwhelmed, most likely, if it's just too much data. But if you break it out period by period, if we change this back to 11, well, we can even keep the whole thing here and just look at the last period. If we scroll down to the last period of data that we have, we can say that this happened in November. So here's November, all the stuff that happened in November, Anthony, all the same employee. Why is that? Why do they have all this other stuff for one employee? Jill, Judy, and then Cindy. Let's take a look at Cindy. If we double click on Cindy's information and go here, paycheck, the gross pay Cindy got was 4,508 and 42. So if we close this back out, there's the 4,508 and the 42. So they broke that out in its 2 components, the regular pay and the overtime. And then if we go down here, what are these amounts? And why are these zeros here? Well, it's 282 and the 65. Let's double click on that, find that. And we might go here and say, well, there it is, the 282 and 65. Where's the federal withholding though? It's not there. Why isn't that there? And that's because these two don't really represent it, because that's included in the gross pay in these numbers on the income statement. those two numbers are really representing the employee portion, the payroll tax portion, that QuickBooks is just grouping together in one number. So again, just be aware of that. That takes a while to mull over what is actually happening there. So we'll close that back out. So just if you analyze one employee at a time, you can kind of see what QuickBooks is doing to generate this report, how it's using the docs, the forms, the payroll form, the check, in order to generate this information, and think about why is QuickBooks organizing it in the way QuickBooks is organizing it. So we'll close that out. And that's going to be our profit and loss. And of course, we only have the one line item on the profit and loss because all we're doing is concentrating on payroll, and QuickBooks is breaking or entering the payroll all into one line item. And just remember that we may have to break that out in some way, at least between the gross pay, the employee pay, the amount that's going to be on the W-2s and the W-3, and the payroll taxes, the amounts that's not on the W-2s and the W-3. If we want to tie those things out at the end of the year, which we will, we're going to have to basically be able to piece this thing out and see how that will work, because this is including both of them. For more accounting information and accounting courses, visit our website at accountinginstruction.info.